Let's talk about geopolitical risk in terms of if you're a CEO or a business. So no one knows this better than you. Trump is unpredictable. He can be a roller coaster. Yet stocks saw a bump when he won. The dollar's been rising too. What is your sense of how businesses around the world are viewing a second Trump term?
Short term, very positive for the stock market as a whole. That is a combination of more fiscal spend, irrespective of the 2 trillion that Vivek and Elon promised to take out. Again, Congress holds the pen on that. It ain't going to happen. No one thinks it will. The fact that a lot of sectors feel like they will be more unrestrained with regulatory rollback. That is particularly true with the financial sector. It's true to a degree with the tech sector writ large. Things like crypto, for example, oil and gas. Pharma stocks, of course, took a major hit on the back of the RFK Jr. appointment. No surprise there. But generally speaking, it seemed to be a benign environment. Taxes, you expect tax extenders on tax cuts that were otherwise going to roll into an end, that all is problematic for other economies. It is strong dollar. It is very weak peso. It's very weak most emerging market economies around the world. Israel, one of the only countries that's seen a bump in terms of the shekel. The Ukrainians have actually seen their bonds do much better because the markets are hopeful, rightly in my view, that there will be a near-term ceasefire imposed essentially with pressure from Trump on both Zelensky more greatly and also on Putin. The markets are responding to all of this, but those are short-term responses. Long-term, you are clearly going to have a lot of inflation in the United States on the back of policy on tariffs, on the back of policy on illegal immigrants to the US. You're also going to see a lot of hedging, because a lot of countries around the world are feeling that the United States is not a leader to be counted on, and is also not a leader with values that align with traditional American allies. And I do think that long-term there will be economic implications for that, but that is not the way the markets respond. Markets are an immediate, sort of animal spirits, reflect what we have right now. And right now, people are believing in the US economy.
Wow. So a lot of different issues there. We'll come to each of them, but I wanted to start with tariffs. This strikes me as the area where anything could happen. So Trump has proposed 20% tariffs on all countries, 60% on China. Who knows where he'll actually land? What are you expecting? How are businesses and CEOs preparing?
We know that Trump sees foreign policy through an economic lens, through a tariff lens. He cares a lot more about that than he does, for example, technology. He focused on US-China, on those 25% ultimately tariffs, which Biden maintained. So, he identified a policy that was going to hurt American consumers, but was aligned with where the American public was, and Biden stuck with it. Technology policy, he did nothing. And Biden did the CHIPS Act, and Biden did the export controls on semiconductors. So, it's really, the tariff lens is very important for Trump. And it's inconceivable to me that he would be trying to roll that back. It's not only important because he, for decades, has been railing against against budget deficit, against trade deficits, against Japan, back in the 90s, for example. This is, well before Trump was a political contender on the national stage, but also because Trump really is focused on more jobs at home, more capital at home, more investment at home, and using both carrots and sticks, subsidies and tariffs to incent that behavior. And even though he has lots of billionaires and CEOs that are very, very aligned with him personally, and they'll be happy with him from their own tax perspective, he doesn't have the Chamber of Commerce in his pocket the way historically many Republicans have. And that's because he's rejecting globalism. He's rejecting the idea that I want to let these multinational corporations do business in an unfettered way around the world. I want them to come back to the United States, and they may have to pay some costs for that. So that, I think, means we should expect more tariffs, and he'll negotiate those tariffs. I don't think that anyone believes that 60% is an operable number for China, especially because of the damage it would do to the US economy. But that very conversation will drive the potential for a deal with the Chinese, who are under a lot of economic pressure themselves. It will also drive behavior to decouple from China and the Chinese market more quickly than multinational corporations otherwise would. And that will speed up because the Chinese economy itself is performing so badly. Now, will he at the same time also hit the Europeans and the Japanese and the Mexicans on that front? Well, he'll do some of it at the same time because he wants to hit those corporations that are acting as pass-throughs for excess Chinese manufacturer, which is the only thing that's working in the Chinese economy right now because their consumer demand is Zippo, to the United States. That's a Robert Lighthizer focus. We'll see it from other parts of the administration as well. He'll also be talking about, I want the Europeans to spend more on NATO. 2% is not enough. Now it's 3%. That's the operable term. I expect he'll say that. And some of that will be paid out in trade concessions. Same thing with the Japanese, same thing with the South Koreans. So all of this is going to continue. What numbers we end up with, I don't know. There'll be somewhere in between, and determining where that number is will in part be on the back of how well those leaders are able to navigate President Trump and a fairly strongly aligned administration.